Hey, welcome back to LR Options. And if you're new, please consider subscribing. Today we're going to go over how to pick a stock. Um, and some of the points we're going to be looking at are what are good stocks to pick, best long-term stocks, good long-term stocks, investing for beginners, best option stocks, stock patterns, stocks to buy for beginners, uptrend stocks, pullbacks, and open interest in stock trading. Okay, good stocks move in a steady direction. So when you're looking for a stock to trade, you're looking for a stock that does not range and just stays in a range for months, weeks, and months and months. You want a stock that either goes in a steady direction in an uptrend or in a downtrend. I mean, it can range a bit, but mostly it'll go up or down. And of course, there's going to be the pullbacks in between. And it should be easy to tell whether your stock is in an uptrend or a downtrend. Okay, good term stocks. Our best option stocks have a history of going in the same direction. So, for instance, if you look at the history, look at the past few months of how that chart has been moving. If it's been moving in the same direction for a few months, then that's a good stock to get into. It should be easy, very easy to say whether it's going up or down, and it should be no question which way is this stock moving. Um, Also, as a beginner, you should get into stocks that do not have high volatility. Stocks that have high volatility, they move very quickly and are very, very unpredictable in either direction. And they normally don't go in the same direction. And if they do, they reverse quickly. And you never really know, you're not too sure what that stock is doing. You could panic. You could exit the trade when you should have stayed into the trade, or you could have stayed in the trade when you should have exited. So it's best not to get into high volatility stocks. Um, Let me see. Also, get familiar with the stock, study the stock, do your chart analysis, use your indicators, use the simple moving indicators. You want to see where that stock has been, which way it's going, and if it's moving at a steady rate. And your moving average indicators help you to determine that. And let's say, okay, now uptrend stocks versus downtrend stocks. Now, uptrend stocks have higher highs and higher lows. That's how you can tell that a stock is going uptrend. And then in the reverse side, downtrend stocks have lower lows and lower highs. So if you want to know whether an uptrend stock is reversing, your higher highs and higher lows are not going to be shifting. Okay, and you're going to be going into lower lows. And it should be it should be going down like that for a certain time, and that's when you realize you're in a reverse and you're no longer in a trend. So you have a reverse trend. Okay, so let's look at some examples on before we even go to that, let's talk about open interest. And when you're picking a stock, you have to look at open interest and volume. You don't want a stock in which there's barely any trading or any open contracts in that stock. So when you look at open interest, as a matter of fact, let's look, I'll show you an example right now. Okay, this is Uber, and let's see if I can show you here. If I can load it up. Here's the open interest. Okay, that's not loading. Let's see if we can, let's look at Lyft. Okay, that's not loading up either. All right, we'll look at Apple. Here we go. So Apple is at 167.30 right now. And let's say you wanted to trade. Let's change this to a single. At 167, there's a high open interest. Open interest is the amount of contracts that are currently open that have been traded on the stock. So here you have 1,270 open contracts. Okay, at the strike price of 167.50. The one below that is almost 12,000 open contracts. That is a lot of open interest. A lot. And the volume here is also very important. Okay, open interest and volume work hand in hand in the liquidity, of the stock. So if you have high volume and high open interest, it makes it so much more easier for you to open your trade, get fills on your trade, and exit your trade without much slippage in profit, and not get stuck holding on to a trade that you really don't want to hold on to for a certain amount of time. And something else that's important in stocks is, in picking a stock, is the expiration date. Try not to choose an expiration date that's about to, that's too near. For instance, if especially weeklies, if you're gonna trade, try to hold on to a stock for 2 weeks or more, and you want to give your stock time to work out. You don't want your stock, you're in it 1 week and it expires in 5 days. It's going in the opposite direction, but it's just a pullback, and you know that the trend, let's say, is an uptrend, and it's going down for the time being. And now what happens is you've only got like 2 days till expiration. You have to close out this trade soon, but you haven't given yourself enough time for this stock to go back in your direction. So now you have to close the trade, maybe at a loss, or not at the profit that you thought you were going to have. And that's why it's best to choose an expiration date that's 2 weeks or more further out. And again, that goes into swing trading. Swing trading is always best, especially for beginner traders. You're not panicking, it's not hectic. You're not looking at the stock all the time. You have enough time to make up your mind. Observe the stock, study the stock, and see how it's working out, and give it time to work out in your favor. Let's see what else. So again, open interest. Let's see if we can go back to Uber. Uber has a very high volume, also 28 million. High volume. Again, high open interest. So if you wanted to get in and out of Uber, should be no problem. Okay, and also it's good to look at, study your stocks. Look at your stocks patterns. Over here we have Uber. Now Uber is in a downtrend. So if you would have gotten into Uber here, you can see that Uber, especially, one thing about stocks is they pretty much tell you where to enter and where to exit the trade. You just have to study this and see the patterns. So in a downtrend, your stock pulls away from the moving averages and they pull back to the moving averages. And in a downtrend, you want to enter that trade for a put when your stock is at the moving average. Like I say, that you see a pattern that your stock likes to meet the get close to the 200 moving average, which is the red line over here. Then you wait a while till it's pulling away, and when you see your red bars, that's when you enter your trade, and your trade is going to be going into a downtrend. Okay, that's the best time to enter the trade. Now when your trade is going back up to meet the 200 moving average indicator, well, that means it's in a pullback, especially in a downtrend. Again, you're going to wait till it goes near that moving average. When you see the red bars forming, you're going to enter, especially when you see them moving under the 9 moving average and the 20 moving average, 50 moving average. That's when you're going to enter your trade for a put trade for a downtrend. Okay, so that's usually one of the patterns that I like to look for. Does my stock like to go up to the 200 moving average, come back down, go up, come back down? Once I see that pattern, I know that the best time to enter that trade is after it's gone up to meet the 200 moving average or the 50 moving average, and then it starts to come back down, and that's a perfect time to enter that trade. Once you get some profit, you get out, or you can wait till you see the green bars forming again. That means it's going back into a pullback, and you can get out of your trade. So let's see what else we have here. And again, you look at your higher highs, your higher lows in an uptrend, and that's how you can tell whether you're in a reversal or not. So if you're in an uptrend and you've got higher highs and higher lows, you're in an uptrend. Now that shifts and starts to go into lower lows, and there are no longer any higher highs, then you know you might be going into a reversal. You just keep an eye on it. Once it passes a certain point, most likely you're in a reversal. Okay, so for now, we're going to end this video. Thank you for showing up and joining us in this video. Again, if you haven't subscribed, please consider subscribing, and we'll see you in the next video. Thank you. Bye-bye.